Yeah, but it's okay, right? At least you spend, you can actually do more thinking actually. Okay, I'm now sharing. All right, so I have shared with you in your Google Classroom new tutorial question. All right, I think this all the sections actually doing the same. Do you have that? Do you have this in your Google Classroom? Tutorial, accrual, and prepayments.
Yes.
All right, okay. So let's do question number 2 first, because I have actually made the answer for question number 1. But because I want to start fresh with you on how you can actually, not the tricks, I want to show you how you can actually do this question easier. I think it's easier, but we'll see whether it's acceptable to you or not. All right. So once you have this question, you are given the unadjusted trial balance. All right, you can see this clearly. You are given the unadjusted trial balance for the year ended 31st December 2018. So what it means is that when you have unadjusted trial balance, it means that the account has been prepared up to 31st December, but my kucing is batuk-batuk. But what is it? But you have not done all the adjustment. The accruals, all right, the prepayment, the accruals have not been taken up. So that's why you have to do, the requirement is always given that you are given this unadjusted trial balance. All right, from there, I delete account titles, no need like account titles. All right, from there, given some adjustment transactions that you need to do journal entries. So that's why the question always asks for a journal entries. Then from there, you are prepared a profit and loss account, and then a statement of profit. So this is one, yeah. All right, this is one. All right, prepare statement of profit and loss and other comprehensive income. That is one. All right, so let me do it like this. Make it. So this is what you are normally required to do. One is a statement of apa ni? Ayo, what is happening? Okay, statement of profit and loss account and comprehensive statement. Number 2 is a statement of changes of equity for the year ended 31st December. So maknanya ayat ni sama. For the year ended command C. This one is also named command C. Alright. Statement of changes in equity for the year ended 31st December 2008. And you are also required to prepare statement of financial position as at that date. So as at that date means that you are referring to not for the year, but for as at 31st December 2018. Right. So there are two requirements. Number 1 is that you have to prepare journal entries, and number 2, you have to prepare these 3 statements. You get that? All right. So let's do how to do this. So what I will show you is that I do not know, because I normally teach students with no background. So hopefully those who are very expert in this, all right, you have to be very patient, so that because we have to cater those without a background. So what are the accounts? So once you have this trial balance, all right, you look at the accounts. When you go through the accounts, you should be able to identify all these accounts, whether is it an asset, liability, or honest equity, right? And the good thing about accounts is that it's normally being arranged, right, according to the category already, right? So we normally have the first part here. We have the cash. So is it cash? Is it an asset? Okay, you tell me. Cash, asset, liability, or honest equity?
Asset.
Asset. What about accounts receivable?
Asset.
Supplies?
Asset.
Okay. What is supplies? Supplies are the things that company buy in bulk. All right, you buy a lot in the beginning of the year, for example, or it could be periodically. But throughout the period, you'll be using that supplies for the purpose of business activity. Example of supplies are your stationaries. Example of supplies are your toner for your printers. Right? Company don't buy one toner, they buy many toners. They don't buy one pen, they buy many boxes of pens, right? For the use in the business, right? Not for them to sell. So then we have a supply, means that later you're going to recognize these supplies as an asset, then you're going to convert that into expenses, yeah? So prepaid insurance, what do we mean by prepaid insurance? What is a prepaid insurance? Insurance that you have paid in advance. So it's always an asset. So any expenditure that you paid in advance, so if you say that the insurance is an expense and you have a prepaid insurance like that, right? So if prepaid insurance, so means that you have paid your expenses in advance, so that is an asset to you now, right? Because you don't have to worry because that is your asset now because I have made the payment for my expenditure in the future. So it's always an asset to you. So you know building is a asset. What about accumulated depreciation building?
Contra.
Very good. It's a contra asset. And then freehold land is an asset. Yeah. We also have, okay, that is all these are your asset. So if you look at the nature, right? So this yellow colored is your asset. And then you have the 3% long-term bank loan. So you look at the bank loan, you know it's a liability. Similarly, we have accounts payable, you have finance costs, all these are your liability. So I put it into different color. So that's your liability. Ordinary share capital, retained earning, and dividend is what we call part of your honest equity, right? And then service revenue is what is the service revenue? It's your revenue, right? It's your income, yeah? And then you have selling expenses, income tax expense, depreciation expense, insurance expense, admin expense, internet expense. So all these are your expenditure. So you know, so all these, okay, you see that, okay, the first yellow, green, and purple, those are your, appear in what? Which statement?
Asset.
Asset, liability, and non-equity will appear in which statement?
Statement of financial position.
Very good, yeah. Statement of financial position. So you have all these to start with. All right, and then your service revenue and all your expenses appears in your statement of profit and loss. And you are required at the end of the day to prepare journal entries and then to prepare the statement of profit and loss account and statement of changes in equity and statement of financial position. So how are you going to do that? All right, if I have that's why I give you the the words, all right, so that you can copy and paste. So what I have done is that if I were to do this in a laptop, in an Excel, I would do something like this. All right, I will just copy, right? So you kalau if you want to do it like me lah, right? So you akan pergi dekat, where is the table? Okay, here. This is the whole table. All right, you can copy this table, Command C, all right, copy, and then you paste the table in spreadsheet, all right? So now you have the question, all right? And you remember that you have to journalize the entries, okay? So what I want you to do is that before you start doing the journal entries, I want you to do the statement of profit and all the statement first, okay? So for example, let's do statement of, let's do for the financial position first. Financial position as at, remember it's always as at 31st December 2018. Okay, so you have that one, command book. Why command X? Okay, right, so I have that now. Okay, so what I do is that, remember I have all these account with all these number. I will just copy, I put it here asset first. Asset, put it in capital. Assets, command book. So that's why it's easy for you to do in laptop. All right, so I will copy my cash, my account together with the amount. Cash, account receivable, supplies, prepaid insurance, building, accumulated, freehold. Is this your asset? Yes. You command C, you copy, you copy and then you paste it here. Saya tak suka command Z. Sebab apa saya tak suka? Sebab kat sini ni ada something which is not nice. Command Sepatutnya my asset command X. Okay, memang command X, command V. Ini particular sikit benda. Right, so command X, this command V. So I sama, alright. So I have my asset here. Leave it first like that, and then I have my liabilities. Remember, liabilities. So leave some space, alright, in between here, so that in case you need to add on more of accounts, alright. For example, you have to add more assets account, so you can have some space here, alright. Maybe you want to leave a few more, right? You can put it like that. It's okay. Just leave it blank, right? So your liabilities from your 3% term loan finance cost, so you take that amount. Finance cost, why is it debit? Is it an expense? I think it's an expense. Let me see. I think your finance cost is your expense. Yeah. So this one is a credit, and then you have honest equity. Similarly, you put it down there. Honest equity, which is made up of your, which one? Honest equity from ordinary share and your retained earning. Okay, dividend is supposed to be part of it. Tapi kita buat retained earnings nantilah. Okay, never mind. Command C. Anyone, dividend, where should it be? Statement of retained earning, right? Macam tak dengar je. You're supposed to prepare retained earnings for the year ended 31st December 2018, right? Make use of putting, writing up the name most of the time, yeah? Okay, now you have, I add on a bit here. Insert, okay. Statement of retained earning, you normally have balance. (31st December 2018), all right, and then you have here, you have your retained earnings. Okay. And you have your dividend. Okay, let's see. Let's leave it like that. Okay. So by having this, even though you already have this, all right, remember that this, whatever that you have here, is already giving you one tick. All right, when you do your exam, all this is already one tick. But for accumulated depreciation, I would want you, instead of you putting that on the another column, I want you to put it as like this. But in terms, instead of positive, you put it into negative, right? And then you want this, if it's an Excel, you want it to be in form of number format, and then you want it to be there's a comma there, and you don't want that 00 at the back, right? So this is your RM. Okay, so leave it like that. So this one actually gives you one tick already, right? Do you get that? So without doing anything, you actually have done a good, you have got something already, right? Kenapa dia tak nak ni ah? Dia ke kanan ni? Why is it like that? Number? But I want it to be comma. Never mind. It's okay, don't worry. Okay, so this accumulated depreciation is a negative, right? So remember that it's a contra asset. So that's why it has to be negative. Okay, so far, are you following what I'm saying?
Yes, Doctor.
Follow ya, I cakap nanti you kata benda madam cakap ni. Alright, so this retained earning, alright, I'm not very good actually retained earning. I think that you have to put in this amount, alright. Retained earning beginning is 14,000, and then command X. You can have your profit, right? So profit here, I do not know how actually. Anyone can help me with this? I think that because you have adjustment here, right? And then you have balance. balance as at, because this one is the unadjusted. It's okay, leave it first. Adjusted balance. I just wrote it as adjusted balance. Okay, all right. You have dividend. How much is the dividend just now? 14,000. Okay. 1650, right? This one is Aurelia, is it? Is it Aurelia or Aurora? Aurora, let's me see. Okay, you see this is actually, I tell you, this is actually the schema, right? See, you have all these, should be there already, right? The one with two ticks means that you have to do adjustment to that. I want to see statement of changes. So you have the share capital, revaluation reserve, and your retained earnings. And then you have surplus, you have dividend. Okay, let's do it together. Again, all right? Apa tadi? Share capital. The command X here is command V. So here is share capital. Right, actually plus 100,000. Right, and then you have dividend. So adjustment is, and then we have retained earnings 21,650. Here is your profit for the year minus dividend. Right, so this one we'll do later. So balance, this is the adjusted balance. I'm not sure about this part, later we check again. Okay, so they have balance 1st January, 31st December. Okay, right. So now what we do is that now, all right, since once from this unadjusted trial balance, you plug in all this information into the statement of financial position, statement of retained earnings, and then you have, mana I punya profit and loss account? Can I put it here? Okay, statement of profit and loss. I know the name is longer. Okay, I just want to put that common bold. So what should be in your profit and loss account? You get the service revenue, that amount, command C. Okay, so you bring that here, command V. So you have that, your service revenue. Okay. Okay. Right, so this revenue is always on this side, and then later you're going to compute everything. Yeah, okay. What else do you need? Okay, so once you have all these in the statement of financial position, you have statement of profit and loss account. So let's color this so that you can see this clearly. Your statement of profit and loss, one, and then you also have the statement of retained earnings. See, by putting all this amount, the account and the relevant amount into the respective statements, you already 50% already. Trust me, you already got 50% of the marks. Okay, now let's do this. Let's do the adjustment, journal entries, yeah? Command S. Okay, let's do journal entries. For the first one, the prepaid insurance is for the period 10 months starting from July 1st, 2018. All right, so means that now you have insurance, what you have? Well, you have a prepaid insurance of 2,800. All right, but this prepaid insurance, means that you make payment for the period of 10 months. So if you make payment July 1st, 2018, so you have to see how much has expired. All right, from the prepaid insurance, how much is the expense that is to be recognized? All right, so it means that initially it was an asset. All right, prepaid insurance. Now you have to convert that prepaid asset, prepaid insurance, which is an asset, to insurance expense. So you're converting from asset to expense. All right, so what is involved is that you have your prepaid insurance. Right, and then you also command X, command V. Hold on, yeah. You are going to have insurance expense. Right, so remember that you have to identify what is the account that is involved. Apa you buat ni? Command X, command V. Okay, right. So the first one is prepaid insurance. You have, means that now from prepaid insurance, how much you have in the account? You have of 2,800. All right, let's color this. You have prepaid insurance of 2,800, but now you know that now it's already December, so you're going to recognize that 7 months, right? July, August, September, October, November, and December. There are 6 months, right? So you make payment for 10 months. So how are you going to allocate that? So you know that you make payment, so you have to recognize 6 out of 10 months, right? Times by how much? You have 2,800. You've made payment of 2,800. So you have to allocate this. Means that at the end, you're going to recognize the 6 months insurance. So 6 over 10 months times by 2,800. I think I do it correct, right? So you're going to debit your insurance expense, and you're going to reduce that from your prepaid insurance, command V. Why you credit your prepaid insurance? Remember, prepaid insurance is an asset. So now you are reducing your prepaid insurance because the amount now reduced by 1,680. Insurance expense is an expense, debit because it's an expense. All right, it reduces your part of your honest equity. All right, that's why it's debited. So let me check the answer first. Where is the debit? All right, you have insurance expense and prepaid expense. See, you have 2 marks there. Okay, so now you already have 2 marks here. How you compute 1,680? Because the number of months expiring is 6 months, counting from July 2018 to December 2018. And the insurance pay is for 10 months. That amount is 2,008. So you apportion that 2,008 to 6 months, and this amount has expired. You are going to recognize the prepaid insurance, the asset. Now you convert the asset into an expense. Anyone not clear about this? So this is your A adjustment, right? So let's look. Okay, clear ke tak? Come on.
Clear.
Okay, let's look at the second one. Come on, add. Okay, now we have supplies. Remember I mentioned about supplies? So now in your account, supplies appear as your asset, right? So supplies now in the account, you have 1,500. So it means that it's an asset to you. But throughout the year, the information provided that supplies used during the year amounted to 1,200. So what it means is that you are going to convert the asset supplies into expense. How much you're going to convert? You're going to convert 1,200 because this is the amount that you use during the year, right? So what you're going to do, which account will be affected? Which account that you are going to recognize as an expense?
Supply expense.
Supply expense. All right. And then what is the other account that you're going to reduce the asset? Supplies. But in this case, asset, yeah, the supplies initially is an asset. So now you're going to reduce that. How much is the amount? How much that is supposed to use?
1,200.
1,200. You don't have to do computation because it's already provided to you. All right. So why you debit your supplies expense?
Because it has reduced.
Because no. Supplies, initially, do you have supplies expense in your account?
No. Because it is expense.
Because the supplies here, the account is an expense. Expense is part of honest equity. Expense reduce OE. So when your OE reduce, debit or credit?
Debit.
That's why you debit every expense account. So whenever you see expense, you know automatically it has to be a debit account, right? You don't have supplies, or you don't have an expense with a credit transaction. No, it's wrong. You know already it's wrong. Yeah. And then supplies asset. Why you credit your supplies asset?
Because the price is reduced.
Supplies reduce. Supplies is an asset here, so it reduced. That's why you credit the account. So always remember, asset is the debit. So when it reduces, you credit the account. Very good. Okay, now let's look at the next one. So anyone not clear about this? Am I too fast?
No, madam. Okay.
Yeah. If I'm too fast, if you don't get it, you just let me know. Okay. Okay. Salaries earned by employees that have not been paid amounted to 5,000. Record salary expense in the admin expense account. So in this case, in your account, you have what we call admin expense of 42,000 here. Right? So your salaries is part of your admin expense. So it says that record in the admin expense. So what should be recorded? What you want to record? What is the expense that you want to recognize now?
5,000.
5,000. So that's the amount. Okay, but what's the account?
Salary, madam.
Salary what? Salary apa?
Salaries, expenses.
Expense, right? Salary expense. Say that salary earned by employees. The word is earned. This one not earned by the company, earned by the employees. All right. So it means that it's a salary. So have you paid the salary?
No.
No. Right? Because they say that have not been paid. So you kena bayar ke tak? Do you have to pay the salary?
Yes.
Yes.
You kena bayar. You have to pay the salary later. Alright, that's why namanya salaries payable 5,000. So when you are not sure, of course you put here as your salary payable is a liabilities. Alright, salary expense is an part of your owner's equity. Right? So now you have salary expense of 5,000 and then you have salaries payable of 5,000. Okay, let's look at it. Is this clear for everyone? So far so good?
Madam.
Yes,
Yeah.
madam.
Alright, next is that you have, yes?
Yang record salaries expense in the administrative expense.
Oh, sorry.
What is it?
Yeah. You instead of you put salary expense, you put administrative expense. Thank you, dear. Administrative expense, then we have salary payable or administrative payable. Quote. I put it like this: administrative payable, or I put salaries payable. I'm not sure whether we have, because I'm sure the expense is admin expense because it clearly says that record salary expense in the admin expense account, right? But the salary payable I put as admin bracket salaries payable, because under admin expense you have a lot of expenses. One of it is salaries lah, yeah. So it's okay that you understand now we have to put into admin expense. It's just that for the payable, right, you put admin and payable is also acceptable. In the liability, we have accounts payable, so maybe later we add on admin payable, right? Is that clear?
Yes, clear.
Okay, now we have D, the freehold land is to be revalued to 180,000. So land, all right, land, I told you land appreciate in value, right? Initially your land, how much is your land? You have a building, you have freehold land 80,000. In the account, the land value is 80,000, but now it says that is to be revalued to 180,000. So if from 80 to 180, how much is the revaluation? How much is the increase?
100,000.
100.
From I see, then you know the value is 100,000. But which account is to be credited and which account is to be debited? Which one do you think? I think that one is revaluation, right? Revaluation of land. So revaluation is part of a share capital. All right, this one is advanced sikit lah. I tengok jawapan dulu. All right, so you have land and then revaluation reserve dipanggil. Right? So we are going to increase the value of the land by 100,000 and we have revaluation reserve. Right, this one will be part of your honest equity. Okay, so you have land now increase debit 100,000. Initially you have 80,000, now you debit additional 100,000, and you open up a revaluation reserve account of 100,000. Okay, clear?
Madam,
Yes.
revaluation to in Malay, what we call this?
Penilaian semula.
Oh, okay.
Revalue. You revalue your asset. Reserve in this reserve account is the account that we call as, for example, if you have share premium. So all these are reserve. Anything that add value to your honest equity. So why now we involve honest equity? Because when you buy the land, for example, the cost of the land values at 80,000, but now it appreciates. You don't have to pay anything, but the land, the asset now increased by 100,000. So once your value of asset increased by 100,000, it must be represented in your honest equity. So if your land increased by, your asset increased by 100,000, your OE is also value now increased by 100,000. Yeah, because you don't have to pay for it. You don't pay 100,000 for the land to increase. You don't buy additional land, but it's just that the value of the land increases. So that's why you give revaluation on the land. So how to increase the value of the land? So you have to create a revaluation reserve. Okay, all right. Then the final one, command X, we have command V here. We have siapa dia? Merger. Okay. 200 ringgit December internet expense has not been recorded because it has not been paid. So what do you think is that? Internet expense? What is another account? Any idea?
Accrual.
Internet payable.
Payable, because you have not paid. Alright, so create je lah payable. Right, so how much is it? 200. So why you debit your internet expense? It's an expense. It's always debit nature. Right, why you have internet payable credit? Because it's a liability. Right, so now you have the 5 transactions, you have all the journal entries. Okay, you want to see how the mark? I think we got all the marks clear. So they put other payable. It's okay. Tak kisah, I don't mind. Okay, I want you to put it like this. Okay, if you look, see how I want to give you marks. If you have this, why I want to show you the marks? Because I want you to know how is it actually being done. Yeah, how is it actually you can actually create generate more marks in your exam. Okay, let's see. Alamak, command Z. Mana I nak buat tadi? Okay, right here you have one for each entry that is correct. Yeah, entry here means that it has to be the name of the account must be correct, the amount must be correct, and the debit and credit must also be correct. So how many you have here? You have, I think you have 10. Right, you have 10 ticks here. So I'm going to give you, the scheme says that 10, later, okay, you have 10 then. Okay, later we compute. Okay, so now by having this journal entries, you already have 10 ticks. Bukan 10 marks, yeah? It's not 10 marks, it's 10 ticks. Ticks is different because ticks later will be divided by total ticks times by the number, by the marks, yeah, accordingly. Okay, so you have done this. So next, what you have to do is, you are going to put all this adjustment, right? Remember just now I said that the first adjustment is your prepaid insurance. And then you have your supplies in your asset. Admin, you don't have that. All right, land, all right, you have land here. Mana land? Land here is adjusted. And then internet expense is new. Internet payable is also new. Okay. So what we are going to do now for every, okay, we are done with the first requirement, journal entries. Now we are going to adjust the account to reflect the adjustment. So all these that you have key in has to be reflected in the accounts here. All right. So what are the things that is adjusted? Let's see. Number one, insurance expense and prepaid insurance. So prepaid insurance here is do you have insurance expense in your profit and loss? You have insurance expense? Yes, you have here 5,000. Right? Then you have additional how much? 1,680. 1,680. So you just add on there. Okay? And then you also have credit your prepaid insurance. How are you going to credit your prepaid insurance? Where is your source? Prepaid insurance here, you minus 1,680. You put it like that. You get me?
Yes.
Why you do it like this now, nanti in your exam? Easier. Okay, so that's the first one. The second one, supplies expense 1,200 and supplies asset credit 1,002. So do you have supplies expense here? Supplies, you don't have any account, right? Supplies, so you create supplies account. You create supplies expense, your profit and loss, how much is it? 1,200. Anyone not following? Number. Okay. All right. So where is there another account? You have supplies here. Remember? Supplies initially need you debit or credit? Supplies asset, debit or credit?
Credit.
Credit. So when you credit your asset, you mean plus or minus?
Minus.
So you minus 1,200. Right. Okay, next you have the other one. C, admin expense 5,000 and admin or salary payable 5,000. Do you have admin expense? You have 42,000 here. So you have new one. How much is it? 5,000. Right? You have additional 5,000. And where is your admin payable? So I can put here administrative expense payable. In the answer, they put as other payable. Yeah, that is also acceptable. Other payable. So how much is it?
5,000.
5,000. So you put it in your liabilities. Okay, then C. Now next D. Land is 100,000 and revaluation is 100,000. Where's your land? Land is your asset. Now you have additional 100,000. Come on, Bob. Okay, your common X. Revaluation. It should be part of your retained earning. Revaluation reserve. How is it supposed to be? Tengok jawapan. Revaluation reserve. How it appears in your. You have revaluation reserve there, right? You have share capital, revaluation reserve, and retained earnings. So let's do this. Dividend kat mana tak tahu. Oh, dividend is part of ni. Revaluation reserve. Right, this one delete. Dividend was supposed to be 14,000. Sorry. Okay. Revaluation reserve just now 100,000. Initially you don't have anything, but now you have 100,000. All right. Dividend. All right. Remember, dividend is a debit because dividend reduces your honest equity. Logically, in order for company to pay dividend, they have to pay out of the retained earnings. So that retained earnings is reduced. So you take out your payment of dividend from your retained earnings. So that's why it appears here. Yeah. And then what else? Land done. So we have done that 100,000. And finally, internet expense and internet payable. Internet expense. Where's your expense? You have internet expense. Yeah. Then you have another, how much? 200. Okay. And then internet expense, where's your liability? Here. right? I can put internet expense, internet payable. It's okay. And this one later you combine under other payable, which is amount 200. Leave it there like that. Okay. So, are you clear about this? How from journal entries, you put that into your statements. Okay, so these are only adjustments that you have. Okay. And these are means that here is your revenue. You put it further down, right? And then this is your expenses, liabilities. We have additional new liabilities here. And retained earning will be changed later. Okay. So what we do now is that, because now we want the adjusted amount, so what we do is that we just take the total sum of each of the account. Yeah. So kalau you pakai Excel, it will be very easy. I just scroll this down. You see? So this is my adjusted figure, 17,000, no change. Account receivable also no change, but I had to put in the new amount. Yeah. But my supplies initially it was 1,005, but now I have credit 1,002. Now supplies is only 300. Prepaid insurance, now we have a 1120. Building remain the same, and then this one is my accumulated depreciation for my building. My freehold land initially it was 80,000, now it become 180,000. If I were to put in how much is my asset, I will just total up this. See, I have my total asset here, 332,220. Okay, what about my liabilities? My liabilities now, because I have new, I don't have additional. I have additional at the bottom here. So I can just add on my liabilities. Right? Total liabilities is 115,200. Okay, don't do the honest equity. You can do it later. All right, honest equity because there will be depending on this. So here also you want the new sum of these two, right? So you just pull down. So you see that you have all the figures here. I don't like it when I don't have the comma there. But when I have the comma, then it will, okay, me okay. All right, so I have this is the new expenses. Put it like that. Command X, command V. This is my expenses. Command bold. So this is my new expenses. No change for selling income, but for insurance increase by 1680. Admin increase to 47,000. Internet expense also increases, and now I have supplies expense. So what I do is that I will just need the sum, but because remember that revenue minus expenses, so I can have negative sum of all this. Right, then I have total expenses is 77280. So what is my sum of revenue? 88,000 minus 778,280. So I have a profit of 10,720. Right, this is my profit 10,000. Where it should be reflected? Where should I bring the profit?
Account profit or loss.
Sorry?
Statement profit and loss.
No, yeah, statement profit and loss. So this 10,000 is my profit for the year.
Statement of financial position.
Financial position? No. You bring this to your retained earning. Ingat ada statement retained earning ni. Alright? So your profit for the year, the adjusted one, you take that one. Plus 10,720. Okay. Tapi yang asal dia tadi mana? Retain in 20. Betul lah. Okay. So now, ni warna hitam untuknya ni. So what happened is that this retained earning, initially it was 21,650, right? This one is before adjustment. And then you have, what is dividend ni? Ni apa ni? Okay, so then you add your profit. Profit ni, where do you get that profit 10,720? Because you do the adjusted profit and loss statement, right? Now the adjusted profit and loss, you have a profit of 10,720. So you plug in that amount here in your retained earning. And then you have a dividend of minus 14,000. Remember, dividend is always minus. Okay. So dividend is minus 14,000. And then you have revaluation reserve of 100,000. So now you want to have the adjusted balance. You just add the total from the top. All right, so you have 100 here under share capital. You have 100,000 under capital reserve. It's common bulk, so let's make it green. Right, so this is the amount that we will transfer to your owner's equity here. Right, so if you want to take, you take that 100,000 here. Right. Okay. Ish, benda ni. Command Z, benda tu. Because I plus eh. Ya. I cannot have this ke? Command Z. Okay, tak payah lah. Dah. So, I buat ni je lah. Tak boleh. 100,000 lah type lah. Okay. And what is my retained earnings? This figure, ya. Plus this figure. Tak boleh juga. Apa tu? I cannot take that figure, ya. Kenapa, ya? I do not know why. But I will just type in my retained earning to be 18,370. And then my dividend remains to be retained earning is already there. Right. And then I have revaluation reserve. How much is my revaluation reserve? 100,000. Okay. So what is my total owner's equity? I take this 100,000. Remember this, my share capital plus my retained earning plus my revaluation reserve. I have 218,370. So if I were to add on my liabilities, my owner's equity, I should have the same amount as my asset. Would I get the same amount? Oh, what is that? $333,570. Is that my asset? Is that my asset? The board tengok ni. Tak sama. 332,220. What's the difference? Okay, my asset is 332,220, but my owner's equity and my liabilities is not the same. So what you do when you don't have the same? Answer. You look at the difference. What is the difference of this? Right, 1350. Where could it be? 1350. Look for that information. 1350. Any adjustment 1350? No. Anything else? 1350. Retained earning 21650.
Finance cost, madam.
Yeah, finance cost. So finance cost must be part of the must be expense, right? How much is it? How much is the finance cost?
1,650.
Where is it? I don't see it here. Oh, it's here. 1350. So my profit now will change because my expense increase. I want it to be this one. Okay. 166 plus this one minus 9370. See? Now it's the same already. Right? Because why? The amount is reflected in my retained earnings, profit for the year. All right, so my retained earnings adjusted one is 13,740. Right? Tu yang I tak suka tu. Still not lah. How? 3280. Tadi nicely 1350 kan? Do we have any finance cost 1350? 1350. Kenapa pula campur ni? Why we have these two? Tak juga. No, you know why? Because 10, this one, alright, because I cannot do that 100720. 6,300. Okay, let's look at the answer. Where we did wrong. Okay, balance is 9370 minus dividend 14,000, you have 17,020. Starting with 21,650. Where do you get 21,650? Retained earnings. 21,650. Why do I have retained earning balance is 10,720? Okay, how much is the retained earning? Initial? Retained 21. Mana I dapat 13 lah? Marah sikit ni. 21,650. So here should be 21,650 plus then 18,370. Now I have 1350. Okay, never mind. Relax. 17, this one is okay, 117,020. 117. Why is this 10,720? Finance cost. Finance cost. Where is finance cost? Finance cost is expenditure. Yeah, here, it's here. Mana datang income tax expense?
Madam, I think you not minus the finance cost.
Finance cost here. Okay, let me check again. Sum of oh, I see. Hold on. I know. Hold on. This one this is not all right. It should be like that, right? 9370. Okay. 9370. So this amount should be 9370. So 17,020. 17,020. Okay, now we got the answer. Okay. So if you do it like this, all right, you don't have to spend so much time. At least you get, if your adjustment is wrong, at least you got one tick already for all the items. Right? You want to see how is it done? The marking? Okay, let me show you. So this 17,600, this one is one tick. Show you. This one is red. Let me show you. Right, this one is one tick because there's no adjustment. Nak warna lain lah. Merah. Tadi. Okay, this is one, but this is two. Why two? Because there are adjustments here. Alright, whenever you have adjustment, there will be two ticks there. The others are one, and here
It's 3 o'clock.
Okay, and then the others here we have 1, 1, 1, 1. And here we have 1, and this one is of course, remember you have the OF, we call it as OF, own figure. So when the figure is actually depends on the other information, then you will see that. Okay, so here you have, you don't have honest equity, share capital, so we only have this one. This one is also OF. 1, this one is OF, and this one is 1. Right, so this figure is OF. For the expenditure, profit and loss account, here is 1. Here is 1, 1, 1. Here is 2, here is 2, here is 2, 1, and 1. Right? So let's see how many ticks we have here for the profit and loss account. 12 marks. 12 ticks. Bukan 12 marks ya, 12 ticks. Do we have that in the answer? In the statement, you only have 11. Why 11? Where do you get this income tax expense 5,700? Oh, memang ada dalam tu. Income tax expense. Okay, alright. So why is this? Oh, dia masuk revaluation dekat sini lah. I think it's okay. So this is just the presentation. If you put it here, kenapa you nak put it here again? Oh, it's just a presentation. So it's okay. Here we have 11, but I have 12. Why do I have 12? 1, 1, 1. 1, 1, 1, 1, 1, 1, 1. Finance cost 1. Spend 1. Oh, profit for the year 9370. Dia bagi tick. So how do you have 11? 2, 4, 6, 8, 10, 11. Why do I have more? Anyone? They only have 2 dekat mana? They only have admin expense 2. Oh, I know. Sini 2. Internet expense ada berapa? 1. Kenapa I buat 2? Oh, dia bagi 1 je 700. There's supposed to be 2 ticks there. Alright, it's okay. But you know that these are the adjustments that you have to take into account. Alright, so this is why I say that if you do based on the, again, okay, let me call your name. Where's your name? Siapa nak volunteer to be called? Fatin Shamila. Number 1, when you get this kind of question, what would you do first?
Statement of financial position.
1, very good. Now you jawab lah 3 terus. Prepare the statement of financial position. Alright, okay lah, boleh lah. Statement of financial position. Then?
3 step madam.
Tak kisahlah, bagilah. I just
Okay. First, we prepare the statement of financial position. Next, we prepare the statement of retained earning.
Okay.
Next, we prepare the statement of profit and loss.
Okay, so these are the 3 payments required, right? So when you prepare that statement, so what you do is that you only transfer the information from the unadjusted trial balance, you plug into the respective statements. You get that? Alright, you transfer your asset, liabilities, and owner equity into your financial position, and then your income and expenses into your and then you have retained earnings. And remember that our retained earnings is made up of retained earning for the year, retained earning brought forward, and then plus profit for the year, minus any dividend paid. Alright, so that is your retained earnings. So if you look at the format here, where's your retained earnings? So you always have your balance. Alright, I put it here because this one is based on the unadjusted trial balance, yeah? So you have retained earnings, beginning of the year, profit for the year based on the profit and loss account, the adjusted one. Then you have your dividend, and your revaluation reserve is part of your capital reserve lah, right? And then you have the adjusted balance. So once you have that, then only you go through the adjustment. Okay, next, let's have Najwa Farid. What do you do next? Once you have transferred everything into the 3 statements?
Make journal.
prepare journal entries. Yeah. So you read every item in the journal entries, then you decide whether should you debit or credit and which are the accounts involved. Is it an expense? Is it a revenue? Is it an asset? Is it a liability or owner's equity? Yeah, so you decide on that, then you do adjustment like this. This is what we call journal entries. Okay, once you are done with your journal entries, next, let's have Ilham Wajdi. What do you do next?
Yes, madam.
What do you do after you have your journal entries?
Masukkan kat SOFP.
Again, you plug in the adjusted figure, the journal entries into the respective accounts. Right, so you check lah if the accounts, the one that you have prepared, the one that you have put into your statements, if the accounts is already there, then you just add or minus. But if the accounts is not there, then you create a new account. It's not difficult, all right? So it's your accounts, you can create new account or whatever, right? So you are the manager. So if the accounts is already there, then you just plus or minus depending on the entries, the journal entries. If the accounts is not there, for example, we have this supplies expense, so you create an account called supply expense. Yeah. So from here, then only you work on your retained earnings. Yeah, you plug in the amount, the respective profit and loss account. So once you have all these, then you can compute total asset and your total liabilities. But for your profit and loss account, right, you compute a revenue minus all your adjusted figure, then you have your profit for the year. Transfer that profit of the year to your retained earnings. So you have retained earnings here. Beginning, you have 21,650. How do you know 21,650? Based on the norm, the first information provided, 21,650. Right, and then you have plug in the profit for the year from your profit and loss account. Then if you have dividend, you minus from your retained earnings. So you get the adjusted retained earnings, plug in that in your profit and loss figure. Yeah, and then you have your revaluation amount. Here is also another 1 mark. Okay, so you are done now. Okay, that. So before this, right, have you done it in such a way?
Yes.
Oh, memang you buat macam tu? Statement start dengan statement terus? Ha.
Buat journal dulu.
How do you do before this, Ilham?
Buat journal dulu madam.
Buat journal dulu, lepas tu?
Tu pindah.
Okay. So now, I want you to try my method. Alright? Based on the unadjusted trial balance, you prepare the statements accordingly. Then only you start your journal entries. Based on that journal entries, you just plug in into the respective accounts. Then you get the adjusted figure. Then you finalize your accounts. Can you do that? Okay, now let's do question number 1. Quickly. Oh, tapi you all kena tulis No, you don't have, okay now, okay, you don't have to write. You look at question number 1. Right? Question number 1, only, okay. For those who do not have basic, are you following or not? Are you doing okay or not? Let me check. Shadila. Do you have Shadila? How are you following?
Good, okay.
Okay, what about Fatiha? Fatiha? Not here? Saida?
Yes, madam.
Saida. Can you follow?
Yes, madam. I'm trying.
Trying, but if you have, after this, if you have problem, you just contact me personally.
Yeah, madam.
Right?
Sure.
Okay.
Sure, madam.
Okay, for those, okay, whether you are direct, if you have no basic or even from those foundation, if you think that, all right, you are not able to follow me this class, all right, today, right, let us have a special class, but only on
Okay.
request. Huh?
Okay, madam. Thank you, madam. Okay.
So I also open to those from the foundation. If you think that you are still not so clear about how I'm doing this now, because I after a few years of teaching, I think that in order for you to score in your exam, right? Of course, of course, you must understand the double entries. You must know your debit and credit. But at the end of the day, you must answer what is required in the exam. The exam requires you the financial statements. But if you spend so much time on the adjustment, and your adjustment is wrong, and then you put in the amount wrongly, of course you won't be able to score marks. But if you got your adjustment is wrong, but at least you already have the initial or the original figure from the unadjusted trial balance, at least you are already there halfway. If not halfway, I would say 70% is already there. Okay, so that's why I want you to do in my method and try to see whether you can do it clearly, right? So if you look at this, for example, question number 1, it's always the same. All right, they give you the unadjusted trial balance and then give you the adjustment. And if you don't understand the adjustment, at least you have put you have answered the part 2, you know, the statement, all this statement, you already have prepared that. So you won't fail if you don't do the adjustment, trust me. Right, so question number 2, all right, it's same. Question number 3, they give you the title of the account, same adjustment. See, it's always they generalize the entries and prepare statement of profit and loss account and all the 3 statements. So what more do you want, right? It's already there. Okay. So we only have 8 minutes. Do you think you can do that in 8 minutes? All right. I don't ask a lot. I just want you to translate balance into financial statement in 8 minutes. Do it now.